Hello and welcome to the next of our lecture recaps. This is a recap of our lecture on social and environmental accounting. The first thing that we looked at here was sustainability. So remember, sustainability was meeting the present needs of the organisation without compromising the future. It also could be said as providing the best outcome both now and in the future for both humans and the environment. So when we relate this sustainability to corporations, it's related to our corporate social responsibility reports. So what we might include there is whether we have sustainable business activities or not. So full costing might be involved here, where we include our environmental costs. We might allocate the social impact and discuss it, given the social justice and the exploitation potentially of people in the area. Also, it might include environmental issues, for example, use of non-renewable energy or indeed damage to the environment. So one of the key issues is measuring sustainability. A Codan's approach is an approach that compares the amount available with the usage of the corporation. So what we can do here is quantify it. We can say, look, this is how much is available, this is how much we're using, and therefore we can decide if we're using too much. Therefore, we can also modify the activity if needs be. A more subjective approach would be to measure intentions. That's not quantified and therefore is much harder to measure the progress. So a quantifiable amount is much better when we want to try and measure it. So we need to remember a few things. We need to remember that economic activity causes an environmental footprint, no matter what it is that the business is doing. So that will be the cost to the environment through the use of resources or potentially pollution or damage. And we need to see if this is sustainable or not. So examples of this would be chemical usage or releases, carbon releases, using too much packaging, for example. All of those will increase the environmental footprint of a business. We also discussed the social footprint of the business and how there's three main areas for this, with the social capital, the human capital and the constructed capital. And we need to try to achieve sustainability in all three of those. Lastly, in this section, we looked at environmental risks. Remember, these arise from the effect of the business on the environment. They could be strategic, for example, reputation risk that affects the whole organisation, or they could be operational that affect specific part of the organisation and the day-to-day activities. We also, after illustration 2, looked at accounting for sustainability. We said we could use full cost accounting, which is to include all costs, not just financial, but economic, social and environmental. So bringing in not just financial costs, but non-financial costs. It seeks to internalise all costs rather than just those that the business incurs itself. We also talked about TBL accounting, which is triple bottom line, which expands the reporting to include other performance. So it focuses on people, the impact that the business has on stakeholders and the impact on the community. It also looks at planet, which is the impact on the environment and whether it's sustainable or not. And lastly, talks about profit, and that's the balance of profit with the other two, the people and the planet. When we're managing our environmental accounting, we can use EMAs. So that's Eco Management and Audit Schemes. So this is a voluntary scheme to improve environmental performance. So there'll be an environmental statement by the business and that will be audited. It'll be seeing whether we can implement effectively our environmental management system. So the elements of this will include such things as the legal aspect. Do we meet the legal requirements in our industry? Reporting requirements to shareholders and stakeholders. Environmental, well, could we do any better with our environmental aspects of the business? And when our employees are invited to, are they involved in the environmental aspects of the business? Do they understand it? Do they know the responsibilities that the business has? We also talked about ISO 14000, which were standards for environmental management. They said that we needed an internal system for better performance in an environmental way, and that must be audited. If we meet the requirements and we're audited, well then we can get accredited under this scheme. The last thing we looked at was auditing, environmental auditing or social auditing. Social auditing, well, we could be seeing if we're achieving the objectives that we've set for the business. We could take both an internal and external view, and we could look at such areas such as employees, the environment, or the community. We could see, therefore, whether we're achieving the objectives that we sought to. When it comes to environmental auditing, well, we're seeing what the impact is of the company. If we were implementing ISO 14000, well, we'd require this environmental audit to ensure that we had the systems in place. So we may look at such things as the waste management of the business, emissions, water consumption, energy consumption, or the impact of the business on the environment. To undertake an environmental audit, the procedure is to first of all agree the metrics, probably focusing on something that we can quantify. We then measure the performance against that set of metrics, and we report the compliance or the variance depending on what we find. So that was a recap of our lecture on social and environmental accounting.